Thank you, Jeff, for having me present here at the conference. It's been great so far. I'm going to do something a bit more international. There's been a huge amount of focus on the India market, which has been great. And this is really to go into one or two things that the World Gold Council is leading on a more international basis. Before I start with the slides, I've only got 4 or 5 slides. I'm not going to talk at you for too long. I just wanted to really go through some of the themes of today. I think the whole digital gold aspect for me is what exactly is digital gold. There's a huge amount of discussion at the moment around tokenization, but that isn't the beginning of digital gold. Digital gold has been around for years and years. And I think the one word that has come up, I think, on every single panel and every single keynote today is the word trust. And I think trust and digital gold absolutely go hand in hand, because effectively digital gold means you are giving somebody your currency, your rupees, your dollars, and they are giving you a promise that there is some gold somewhere being stored safely for you in a vault, and you have to trust that. Without that trust, digital gold really can't exist. Now, that trust can come in quite a few ways. It can come in regulation. So we saw one of the slides on ETFs, ETFs, the first gold physically backed ETFs, 2003, 2004. So there's 22, 23 years of digital gold already. And regulation very much is the driver for the trust in those. When you are going to have products that don't have a regulatory wrapper around them, how can we best as an industry create that trust? And so one of the things that the World Gold Council has been looking at in the digitalization space is very much, we've talked about decentralization in the token space and more standard digital products. The gold is vaulted perhaps in another country from where you are. What can we do to both digitalize the trust and centralize the trust? Because as it stands at the moment, every single product that is digital based is its own trust silo. The provider of that product has to engender the trust. They have to put all the wrappers around they can to say that you can trust my product, and that could be validation and audits of the gold in the vault. It can be at the technical level if you've got it wrapped up as a token, and we've seen various ways in which that is being done. But is there a way that the industry can come together and centralize that trust so that all of the individual products and innovators can plug into trust without having to build it all themselves? So there's a vision from the World Gold Council which will be published in a white paper in the next month, which really goes into this idea, which is, can the industry, and it will be an industry ecosystem, come together and create a platform that will pretty much orchestrate all of the providers in the market today? So that's liquidity, it's vaulting, it's legal structures, it's technology, but put that in such a way that it will allow a plug and play. So there can be innovators out there that can simply API into all of the physical gold they need in a very trusted ecosystem, all responsibly sourced, verified in the vault, etc. So that's one of the initiatives we are looking at the World Gold Council at the moment. As I say, we'll be publishing more on that in the next few weeks. Now, this was mentioned, Wholesale Digital Gold. Our CEO, David Tate, mentioned it in his keynote earlier this morning. This is an initiative that is very much centered on the OTC market. So that could be known as the London market or the 400-ounce market. over-the-counter market. So we've defined it as the wholesale market. And this came from a piece of work that was done by the Financial Market Standards Board, which is a London-based member body. All the banks are members, and they had a look at the OTC market. And basically, they came up with some observations of where it needed improving or could benefit from improvement. At the end of that process, the World Gold Council took those enhancements and those observations, and we wrapped them in a project and engaged the market, and we're like, okay, how can we actually deliver on what the OTC participants themselves have said is needed for the market? So very simply, and there are only 3 or 4 slides, so it won't go on for too long. But in a very simple way, today's OTC market, wholesale market, operates in the allocated and unallocated markets. So allocated, as you'll all know in this room, you can allocate a 400-ounce bar, getting on for a couple of $1 million, I imagine at the moment, and your custodian will keep that in the vault for you. So you're fully allocated, you know the bar serial number that you own. So you can trust that, safe, secure. The unallocated market does many things. It's one of the most important markets for me globally. It's the way I see it, it's the oil for the wheels of the market. It finances that entire value chain. For example, the large-scale miners, when they load a shipment of doré onto the van straight out of the gold room, they expect to be paid there and then in unallocated ounces of gold. And if that is going direct to a refiner and not being financed through toll refining, someone has to make sure those unallocated ounces are with the miner, and that will generally be the refiner. So the refiner then needs the financing. And that is all done through the unallocated market. So it's a hugely, hugely important part of the global market. There will be links to the market here in India, the financing side of it, that will ultimately then finance the gold that's going to be imported here into India, that will finance perhaps the gold that's on consignment here in India. So they are very closely linked. However, though, the unallocated market is not a bar that you know the serial number that is on a shelf in a vault for you. You are taking risk with your single counterparty bilaterally, pretty much against their balance sheet. The bullion banks do hold gold against unallocated positions, but irrespective of that, you are still taking credit risk against your counterparty. So we looked at this and were kind of, well, what can we do to solve for that, and how can we bring in some of the enhancements that were identified through the FMSP process? So this is the third pillar again that David referred to this morning, wholesale digital gold, and essentially that is the best of both worlds, and it will take the allocation, so it will be fully physically backed with 400-ounce bars. They will be pooled, and I'll go into a bit more on how that's going to work. So you will have the absolute surety of physical gold backing, so that credit risk has been removed from the process. But we are also going to make sure that that pool of physical gold is digitalized. So it will be fractionalized, it will be digitalized, and therefore we've given 400-ounce allocated gold bars the mobility and the utility that they've never ever had in the history of the market. And I'll come on to some of the opportunities that this is going to open up in a second. So effectively, pool gold interests, PGI. That is the acronym, the name we've given to the digital representation of this pool of 400-ounce good delivery bars. Just to give you an insight into this project, we started probably about 2 years ago now, and this is the first. We published a white paper probably about 4 or 5 months ago, and that took 18 months to get to that white paper. During those 18 months, we worked with Linklaters and 6 or 7 of the biggest global banks, including the large London bullion banks. And what we were working on was essentially a brand new legal structure for the financial markets. So I think it's important to, across the bottom of the slide there, just to stress that this is not about tokenization. These aren't tokens. This is a financial market infrastructure upgrade. This is upgrading the 400-ounce market to give it a digital representation. So we've worked on the legal structure for the what's called the PGI. Why is that so important, and why has it never been done before? Because at the moment, gold as an asset isn't regulated, but in the London market, all of the participants are regulated. So all of the banks that partake in the London market are heavily regulated. So you can argue there is a pseudo regulation of the wholesale gold market, but the asset itself is not regulated. And what that has led to, it's led to the regulators looking at gold unfavorably. So there is a regulation, without getting into too much on this because it is fairly dry. There is a regulation in the UK called FCAR, Financial Collateral Arrangement Regulation. It's called the Directive in the EU. It comes under Dodd-Frank in the US, and there will be part of that in the India regulation as well. And that forbids gold being recognized as a financial collateral. Now, that makes a huge difference, because when you are a bank and you are pledging billions of dollars of margin, either to clearing houses, bilateral transactions, you will only pledge collateral that you know has the strongest, most robust legal wrappers around it. Because if you pledge collateral that doesn't have those, and there is a default in the overnight chain, be it at a clearing house or be it with your counterparty, you can then find yourself waiting weeks or months to get your assets back. So banks won't take that risk. So gold traditionally has never been used in the banking system as a financial collateral. So the order in which we had to do things was start negotiation with the regulators. Could gold ever be recognized as a financial collateral? Their answer back was, well, we won't say no, but under its current legal structure, no. So we went away and we've worked on the legal structure for over 18 months with the bank's legal teams, their digital asset teams. And we have come up with a legal structure that is underpinned by the pooled gold interest that we believe is, and we have the legal opinion, does make gold eligible as a financial collateral. Now, that in itself is game-changing for the gold market. But the other issue we had there, when we look at number 3, the PGIs, they are fractions of gold. And we use down here to 1,000th of an ounce. You could obviously go further than that if you wanted to. Up until this time in history, the banks, the bullion banks, cannot fractionalize a 400-ounce bar. So even if they wanted to, it's against the regulation. It's called a collective investment scheme. So we've also had to lobby the regulator to adapt and change the collective investment scheme. And the way that we've done that is partly through the legal structure, but the other way that we've done it is via the pooled gold interest. All of the banks that partake in this ecosystem will co-own the physical gold. That is really, really important. When they put a bar in, that bar becomes owned by all the actors in the ecosystem. And through that, co-ownership, it means then that the operator of this ecosystem can create the digital representation. And that digital representation is completely fungible, 100% fungible. You could buy it from, for example, JP Morgan and instantly sell it back to HSBC, which is impossible in today's market. You can't do that because you need bilateral credit lines. You can only work bilaterally with one counterparty. You can, of course, sell a 400-ounce bar to another bank, but that takes days. So this is instant. It's a fungible instrument that is fractionalized with a legal structure around it. The last thing here, and the most important bit, I think, for the legal structure is that digital instrument, the PGI, and this is where we get back to trust, is bankruptcy remote. It's absolutely bankruptcy remote. So if you are holding it in the books and records system and you're the client of a broker and your client is then holding it, you have legal entitlement to the value of that gold. You are not going to get caught up in some sort of administration process. So that's been the 18 months of work we've been doing with the banks and the lawyers. Now, I think this is, for me, the compelling bit. What are we opening up and why are we doing this work? So the top line there, gold as collateral. The total overnight collateral value is around $30 trillion. That is all of the margin that is being pledged across every exchange globally, bilateral, under UMR, and all of those things. So that's 30 trillion. Gold doesn't play in that at all. At all. It is accepted as a collateral, not a financial collateral, but it will be accepted as a collateral at clearinghouses. So exchanges around the world will accept gold on the basis that it is an allocated bar and it's in their choice of vault by, I think it's 4 p.m. in the afternoon. So it's impossible because you don't know what margin you're going to be using that night. The tri-party agents aren't going to be moving gold, never mind around one city or multiple cities. They're just not going to do it. So gold isn't used. So if we can tap into the billions and billions and billions of dollars of gold that is sitting doing nothing overnight, that can be in central banks, that can be in bullion banks. As long as that gold meets the qualification for the ecosystem, responsibly sourced, it meets the technical standards, it's in one of the registered vaults, then that can now be mobilized as collateral. You can now use that as financial collateral. So the opportunity there to mobilize billions of dollars worth of gold, we believe is huge for the market. And it's quite, honestly, it's game changing. And we've had, since we published the white paper, a huge amount of interest from the central banks, who they sit on the gold in their reserves, and some of them use it in open market operations, very rarely. It's not really a done thing. They're not lenders of last resort as they are for their sovereign bonds. But this gives them the opportunity to get that gold into the overnight markets and repo. So therefore, you can imagine that gold can possibly become the cheapest to use margin. Because if it's not earning anything at the moment overnight, 50 basis points is a good thing. And so why pay 400 basis points for a treasury when you can borrow gold maybe for less than 1%? So we see a whole mobilization coming from this project. But just to wrap up there, and coming back to my point before the presentation, it is all about trust, and it's about the industry being able to demonstrate that trust and lead on that trust. And that's where the World Gold Council is really playing the major role. So in around a month's time, within a month's time, have a look at the white paper that we publish. It does a very good job of explaining how this ecosystem can be developed. The PGIs I've just talked about, they could well underpin this ecosystem so that you have a secondary layer of trust there as well. So coming together, bringing all the counterparties together, enabling the trust layer of the physical gold, and then allowing innovators to actually innovate with a mechanism that is seamless, but most importantly, commercially viable. Every single digital product today has to get an agreement for liquidity for the gold. They have to store that gold. They have to pay the trading fees on that gold. They have to pay the insurance. They have to have the legal representation around that gold. If that's all taken care of for them, and they can literally plug and play into physical gold in a trusted ecosystem with the industry, then again, we believe that is game changing for digital assets. And finally, just to finish, because I'm just coming up on time, you can see where this ripple effect will go global, and it will be in the market here in India. You have the BGR for the International Exchange in Gift City, the EGR, which is coming domestically, both electronic representations of gold, both very trusted. Do they then become swappable with a PGI, which is based in a London market? So you can begin to see, I'll leave it there, but the opportunities then for swaps that are going to be purely digital, effective, seamless, and quick from one trusted ecosystem to another, we are really going to join the markets up. But that is for the next phase of the project. So I'll leave it there, and thank you very much. Any questions, then I'll be around somewhere, so come and give me a shout. Thank you.
Thank you very much. Let me put our hands together for Mr. Mike Oswin.